All right, so we're diving deep into Bill Cara's Global Market Navigator report, the Week 11 edition. We've gone through it, pulled out what we think are the most important bits, and today we're going to break it all down for you.
Trying to make sense of what's going on in the global markets.
All right, exactly. And for those who want the full deep dive, you can always check out the report itself at billcara.com. But for now, let's jump right in. Week 11, what jumped out at you?
Right away, Kara's pointing out this huge shift, the global landscape. It's changing. He talks about how President Trump is moving away from that, old world order, the established one.
It's a multipolar world.
Yeah, exactly. Multipolar. And that has implications, big ones, for all the markets, really.
Okay, so things are being shaken up on the world stage.
Right.
And what does that mean for investors? How do they navigate this?
That's the key question, isn't it? And agility is what Kara stresses. He's saying we're seeing these really fast policy changes, and the market, it reacts just as quickly. So what does that mean? You got to be flexible.
Makes sense. You got to adapt, right?
Absolutely. So he's saying, look, focus on the money flow, watch the actual prices, and keep an eye on those price-to-earnings multiples. Those are your guideposts.
Your compass in this crazy market.
Yeah, exactly. Because you can't be stuck in your ways when the ground is shifting beneath you all the time.
All right, so we've got this multipolar world emerging. Things are moving fast. And then, of course, we have the tariffs. I mean, they've been a constant factor for a while now. What's the latest on that front?
Still a major concern, that's for sure. Carr is saying that U.S. trade policies, those tariffs especially, they're creating so much uncertainty in the markets.
I imagine.
And he specifically mentions tech, energy, and transportation. Those sectors are really feeling the pressure.
Right, and it's not just a few isolated companies. We're talking about entire industries.
Exactly. And while there might be, some small opportunities here and there for some people, the big picture, Kara sees downward pressure on equity prices overall because of these trade policies.
So those tariffs, they're having a real impact. Not just something we talk about theoretically, but actually affecting these key sectors.
Absolutely. It's playing out right now.
Okay, so let's dig a little deeper into that.
Yeah.
How are these tariffs impacting different sectors and regions around the world? Give us the rundown.
Well, the impact is widespread, that's for sure. And it's not just the initial tariffs, it's the retaliation. Other countries are responding with their own tariffs.
A tit-for-tat kind of thing.
Yeah, and it's putting even more pressure on certain industries like the automotive sector, agriculture. Those are getting hit particularly hard.
And I think Kerry even outlines a pretty concerning scenario, doesn't he? A worst-case scenario, if you will.
He does. He talks about a potential economic war. And if that were to happen, he predicts, some pretty grim outcomes. We're talking about a sharp drop in GDP because trade would basically fall apart, and job losses, huge job losses concentrated in manufacturing hubs.
So not just an economic downturn, but a real societal impact.
Right. And then the recovery. He thinks it would be a really long, drawn-out process. And of course, foreign investment would plummet. I mean, it's a pretty stark picture he's painting, but it really highlights how serious this could become.
Yeah, it definitely underscores the gravity of the situation.
Mm-hmm.
And what about the European Union? How are they expected to handle all of this?
The EU, they're not immune to this. Kara says they're likely to face big disruptions, especially in their core export industries, like automobiles, machinery, those kinds of things. And the retaliatory tariffs. Those are only going to amplify the problems.
Make things even tougher.
Yeah, exactly. And you have to remember, global trade is interconnected. So when one part of the system gets disrupted, it creates ripple effects everywhere.
Right, it's all connected. So it's not just about the U.S. and China, for example. It's a global issue.
Precisely.
Now, the report also looks at how specific countries are responding to these trade dynamics. Let's start with the U.S. What actions have they taken?
Well, they've implemented a 25% tariff on steel and aluminum imports. Global imports. Their reasoning. To protect domestic industries.
Trying to bolster their own companies, right?
That's the idea. But Kara points out that this could backfire, lead to higher costs for everyone, manufacturers and consumers. And if things get more expensive in the U.S., that makes their businesses less competitive, and it could even fuel inflation.
So good intentions, maybe, but with potential unintended consequences.
Yeah, that's often how it goes.
And what about Canada? They've been directly affected by U.S. tariffs. How have they responded?
Pretty directly. They slapped a 25% retaliatory tariff on U.S. goods. And we're not talking about a small amount here, almost $30 billion worth of goods. That really shows you the tension in that trade relationship and how both sides could end up suffering economically.
Yeah, it's not just a political spat. It has real economic implications. And then there's Mexico. Their relationship with the U.S. has been under the microscope lately. What's their situation?
Well, right now, there are no tariffs on Mexican-made goods. They've been paused for now. But Kara points out that trade negotiations are ongoing, and that means Mexico is still vulnerable.
To future tariffs.
Exactly. So they're in a tough spot, still very dependent on the U.S. economically, and that makes them very sensitive to any potential trade barriers that might come up.
Makes sense. Now, let's shift gears a bit and talk about specific industries.
Yeah.
How are sectors like energy being impacted by all of this?
Well, energy is a big one, especially with the U.S. and Canada. Those Canadian oil and gas exports to the U.S., they're getting hit with tariffs, which means higher costs, more strain on the trade relationship. And the report even suggests that Canada might try to use their energy sector as leverage, because the U.S. relies on those exports. But that's a risky game to play, even if they have that card to play.
A delicate balance act, for sure. What about the agricultural sector? We touched on it earlier.
Yeah, agriculture's taking a hit too. Farmers in both Canada and Mexico are really feeling the pinch. Those retaliatory tariffs are impacting their ability to export crops, livestock, all the things they rely on for their income. It's hurting their livelihoods and the overall agricultural economies of those countries.
Yeah, those are real people's lives being affected. And are there any other industries that are particularly vulnerable right now because of these tariffs?
The report specifically mentions plastics and aluminum as being under pressure. They're facing higher raw material costs because of those tariffs, and at the same time, their export opportunities are shrinking, so they're getting squeezed from both sides, basically.
Tough situation for those industries. So looking ahead, what does Kara see for these industries in the long run? How can they adapt to this new reality?
Well, he thinks it's going to be a mix of challenges and adaptations. For example, he talks about Canada trying to diversify its trade so it's not so reliant on the U.S. That could help in the long run, but it's not a quick fix. And he really hammers home the point that a full-blown trade war would be bad for everyone.
I imagine.
Yeah, he thinks Canada would face higher prices for consumers, job losses in those export-dependent sectors, and overall slower economic growth. So the focus right now, he says, should be on damage control, minimizing the negative effects, and trying to find a solution that works for both sides, a solution that protects their sovereignty and maintains those key economic relationships.
Makes sense. Okay, so we've covered tariffs, we've talked about their impact on specific sectors and regions, and now let's zoom out a bit and talk about the bigger picture. What about geopolitics and the actions of central banks? How are they influencing the market right now?
Well, as we've been discussing, those big geopolitical moves, particularly those tariffs that President Trump announced back in March targeting Canada, Mexico, and China, those have injected a lot of volatility into the market. And the report highlights the fact that the S&P 500 had its worst day of the year on March 10th, a drop of almost 3%, driven by those growing recession fears.
So those political decisions, they're having a tangible impact on how investors are feeling.
Yeah, absolutely.
And what about central banks? What role are they playing in all of this?
Well, everyone's watching them very closely right now, trying to figure out what their next move is going to be, especially with all this uncertainty. And Kara, he looks at the U.S. Secured Overnight Financing Rate, or SOFR, as a kind of barometer of caution among those financial institutions.
SOFR, for those who aren't familiar.
Right. It's basically a measure of how much it costs banks to borrow from each other in the short term.
Okay.
And while SOFR did drop a little bit over a couple of weeks, it's still at a level that suggests some caution in the financial sector. They're not panicking, but they're definitely being careful.
So a little bit of unease, but not full-blown alarm bells yet.
Yeah, I think that's a fair assessment. And the report also looks at how different currencies are performing against the U.S. dollar. That's always a good indicator of what's going on globally.
Definitely. So what were the major movements there?
Well, during that week of March 16th to the 23rd, the U.S. dollar actually strengthened against most of the other major currencies. The euro and the British pound, they both weakened against the dollar.
Lost some value.
Yeah, and they both seem to be heading downwards. The Canadian dollar, it also weakened, but held up a bit better than the euro and the pound. And then the Japanese yen, that also continued to lose ground against the dollar. It had been doing that for 3 weeks straight.
So a general trend of the dollar gaining strength. Were there any exceptions to that?
There were. Only the Swiss franc and the Canadian dollar managed to buck that trend and actually gained a little ground against the U.S. dollar during that week. And at the other end of the spectrum, the Turkish lira was the weakest performer.
Interesting. So a mixed bag, but generally a stronger dollar. What's Kara's take on the short-term outlook for currencies?
He thinks the dollar is likely to continue its upward trend in the near term, especially against those other major currencies. And his reasoning is that the U.S. Federal Reserve hadn't lowered its interest rates at that point, while several other central banks had. So that makes the dollar more attractive to investors.
Makes sense. Interest rates always play a role in currency valuations. Now, what about government bond markets? What signals are they sending right now?
Well, those 10-year U.S. Treasury bond yields, they actually decreased, dropping to 4.32% on March 14th, and then even further down to 4.252% by March 21st. And, when bond yields go down, it often means that investors are looking for safer assets, they're getting a bit nervous about the economy.
Shifting towards more conservative investments.
Yeah.
And what was happening over in Europe with bond yields?
Germany's 10-year yield, it actually went up initially to 2.93% on March 13th.
Okay.
And that was because of news about increased government spending plans. But then it reversed course, and by March 21st, it had also dropped down to 2.76%. So again, that same pattern of declining yields reflecting those growing recession fears.
So the similar story on both sides of the Atlantic.
Yeah, pretty much. And with all this fluctuation, Kara's message is clear. Investors need to be cautious and be ready for more shifts in market sentiment.
Stay nimble.
Exactly.
All right, so we've covered geopolitics, central banks. Now let's move on to commodities. What's happening in those markets, and what does it tell us about the broader economic picture?
Okay, so in the world of oil, we saw some price increases. Both WTI and Brent crude, those prices went up for the week, mainly because of expectations of tighter global supplies. There are sanctions on Iran, and OPEC Plus is planning to cut production, so less oil on the market means higher prices.
Classic supply and demand. What about precious metals? Gold, for example.
Gold kept climbing. It was the third straight week of gains for gold. And that's really being driven by what we've been talking about. Economic uncertainty, geopolitical tensions. Investors are looking for a safe haven, and gold is often seen as that safe haven.
A way to protect their assets when things are volatile. What about agricultural commodities? Any notable movements there?
Corn futures saw a little bump, about 1.3% for the week, but soybeans actually went down a bit by about 0.6%, so some mixed signals in that sector.
Okay, and lastly, industrial metals. They can often be a good indicator of overall economic activity. What are they telling us?
Copper is the standout. Prices jumped significantly, going above $5 per pound, with strong gains for the week, the month, and even for the year so far. It's really interesting to see that because most other metals, like gold and silver, they actually became what's called technically bearish later in the week.
Technically bearish, meaning?
Meaning that their recent trading patterns suggested that prices might go down. So some traders took some short-term profits, selling off a bit. But Kara notes that a lot of investors are still holding onto those metals for the long term. They're betting that any increase in the value of the U.S. dollar will be short-lived.
So they see those metals as a good long-term bet.
Yeah, that seems to be the sentiment.
Now, shifting gears a bit, I want to talk about something new that Kara introduces in this report, something called Bill's Global Best 50. What can you tell us about that?
This is a new feature. He's basically compiling a list of 50 companies that he considers to be top-notch, high-quality companies with a global presence.
A sort of watch list, maybe?
Yeah, you could think of it that way. He's actively researching these companies as potential investments.
And does he give any examples of the types of companies that are on this list?
He does. He mentions Johnson & Johnson and Roche Holding in healthcare, JP Morgan Chase & Co. and Santander in financials, Lockheed Martin Corporation in industrials, and ASML Holding, which is a tech company based in the Netherlands.
So a pretty diverse mix of big, well-established companies from different sectors. What criteria is he using to select these companies? What's he looking for?
Well, the descriptions he provides for each company highlight their key strengths. So for Johnson & Johnson, he mentions their diversified healthcare business and strong cash flow. JP Morgan Chase gets recognized for its robust balance sheet. ASML, he talks about their leadership in AI lithography. And Roche, their strong R&D efforts. Santander, he points to their growth in digital banking as a positive.
So really focusing on their core strengths and what makes them stand out in their respective industries.
Exactly. But he's also realistic. He doesn't just paint a rosy picture. He mentions some potential weaknesses or considerations for each company as well. Like for Johnson & Johnson, he notes the litigation risks they face. For JP Morgan, he acknowledges their exposure to potential economic downturns. Roche, he describes it as a potential value play in the healthcare sector. So he's doing his due diligence, really taking a balanced approach in his assessment.
Okay, so Bill's Global Best 50. That's something to keep an eye on in future reports. Now, in addition to all the market analysis, Kara also shares some of his personal insights and experiences in this report. What are some of the key takeaways from his perspective?
I think one of the most valuable things he shares is his experience during the 1987 stock market crash, Black Monday. He was right there in the thick of it.
Wow, that must have been intense.
Yeah, and he really emphasizes how important it is to pay attention to market signals. He learned that lesson the hard way, I think. He's saying, don't ignore the warning signs, be vigilant, stay informed.
Words of wisdom from someone who's seen it all. And what about his overall philosophy as an investor? What's his approach?
He's all about empowering individual investors.
Okay.
He wants people to become independent thinkers, not just blindly follow the advice of big financial institutions. He encourages people to develop their own critical thinking skills, like Warren Buffett or Peter Lynch, those legendary investors. He believes you should be able to analyze the market yourself and make your own decisions.
So taking control of your financial destiny, not just handing it over to someone else.
Exactly. And he even talks about his own career path, how he transitioned from working within that traditional financial system to becoming more independent, more focused on strategic thinking. Yeah, he even uses his yachts as a metaphor. He calls his first yacht Dream Merchant, representing that time when he was working within that system. And his second yacht, he named it Time and Space, symbolizing his shift towards a more independent, self-directed approach.
I like that.
What?
So he's walking the walk, so to speak. And what about the Global Market Navigator report itself? What's the mission of this report?
He wants to democratize financial literacy. He wants to give people the knowledge and tools they need to understand the markets and make their own informed decisions. He sees it as a way to level the playing field, to empower individuals and challenge what he sees as the dominance of the financial services industry.
So it's about giving people the information they need to make their own choices rather than just relying on the advice of others.
Exactly.
Now, given everything we've discussed today, all the geopolitical shifts, the tariffs, the central bank actions, what's Kara's overall assessment of the current market environment? What's his outlook?
Well, he's definitely concerned. He talks about the potential for what he calls the Trump tariff card, how those tariffs could be used as a weapon in this broader strategy of Make America Great Again. And he even raises the possibility, though he doesn't think it's likely, of the U.S. taking drastic measures, even suggesting the idea of annexing Canada.
Annexing Canada. Wow.
Yeah, he throws it out there. He doesn't think it would happen. He sees it as legally and politically impossible. But he does think it reflects a certain mindset, a willingness to consider extreme options. And he suggests that if those kinds of strategies fail, there's even a risk of military action, which could draw in NATO allies and escalate the situation even further. So he's clearly worried about the potential for things to spiral out of control.
Yeah, that paints a pretty alarming picture.
Mm-hmm.
So with all these risks in mind, what advice does he give to investors? How should they navigate this uncertain terrain?
He urges caution. He thinks the window of opportunity in many markets is closing, and he stresses that risk management should be the top priority right now. He advises investors to focus on companies with strong fundamentals, those solid companies with good growth potential. And he says it's crucial to stay informed, to keep track of those global economic trends and policy changes as they happen, because things are changing fast and you got to be ready to adapt.
Okay, so a lot to digest here. Let's try to summarize this deep dive into Bill Kara's Global Market Navigator Report 11. We've got a global market that's grappling with some big shifts, a lot of uncertainty, and those U.S. trade policies, they're really having a ripple effect across the board.
Definitely. And we're seeing the impact on different sectors and regions, and it's definitely shaping how investors are feeling, how they're approaching the market.
And central banks, they're playing their role too, trying to stabilize things, but their actions are being scrutinized very closely. And then you have those commodity markets, they're also sending signals, some positive, some negative. It's a complex picture for sure.
Very complex. And the report really highlights the importance of being flexible, of managing risk carefully, and of really digging deep into those individual companies, looking at their underlying strengths. Don't just chase the hype.
And let's not forget that new feature, Bill's Global Best 50. It's an intriguing concept, and I'm definitely curious to see how that list evolves in future reports.
Me too. It's a good reminder to focus on quality and to think long term.
Absolutely. Well, we've covered a lot of ground today, and I want to thank you for joining us on this deep dive. If you found this discussion helpful and you're interested in exploring Kara's full analysis, you can find the complete Global Market Navigator report at billkara.com. Go check it out.
It's worth a read.
Now, I want to leave you with something to think about. Kara talks about this shift towards a multipolar world where power is more distributed. How do you think that will play out in the long run? And how might that impact your own investment strategies? What sectors and regions do you think will be the most resilient in this new world order? And where do you see the greatest opportunities or the biggest risks?
Those are the key questions. And this deep dive, it's just a starting point. We encourage you to keep learning, keep analyzing, and develop your own informed perspectives. The global market, it's always changing, always evolving. So staying ahead of the curve, that's the key to making sound investment decisions. Good luck out there.